Hey there, YouTube fam. Welcome back to our channel. Today, we're diving into an important topic for all you entrepreneurs out there. We'll be discussing the difference between an LLC and an S-Corporation. So if you're ready to level up your business knowledge, hit that subscribe button and let's get started. Alright, let's begin by understanding what an LLC and an S-Corporation are. An LLC stands for Limited Liability Company, while an S-Corporation is a specific type of corporation that has elected to be taxed under Subchapter S of the Internal Revenue Code. Now, let's explore the key differences between these two business structures. The first major difference is in terms of ownership and management. An LLC is typically owned and managed by one or more individuals or entities, known as members. The members have flexibility in determining how they want the company to be managed. It can be managed by the members themselves or by appointing managers. On the other hand, an S-Corporation is owned by shareholders and managed by a board of directors elected by the shareholders. The shareholders elect officers who handle the day-to-day operations. Moving on to taxation, this is where things start to get interesting. By default, an LLC is considered a pass-through entity for tax purposes. This means that the profits and losses of the LLC pass through to the individual members, who report them on their personal tax returns. This avoids the issue of double taxation that is often associated with traditional corporations. However, LLC members are also subject to self-employment taxes. You can file Tax Form 2553 under your LLC so that you can do taxes as an S-Corp, even though you have an LLC. By electing S-Corporation status, shareholders can potentially reduce their overall tax liability. This is because S-Corporations allow for the distribution of profits to shareholders as distributions instead of wages, which are subject to self-employment taxes. Distributions are generally taxed at the individual shareholder's tax rate, which can be lower than the combined corporate and individual tax rates in a C-Corporation. Similar to other corporate structures, electing S-Corporation status provides limited liability protection to shareholders. This means that the personal assets of shareholders are generally protected from the corporation's debts and liabilities. However, it's important to note that this protection is not absolute, and certain exceptions may apply. In contrast, an S-Corporation is also a pass-through entity, but it has the added advantage of allowing the business owner to take a reasonable salary and receive the remaining profits as distributions. This can potentially result in tax savings because the distributions are not subject to self-employment taxes. However, it's important to note that the IRS requires S-Corporation owners to pay themselves a reasonable salary to prevent the excessive distribution of profits to avoid payroll taxes. Another difference lies in the ownership restrictions. An S-Corporation has certain limitations on who can be a shareholder. For instance, an S-Corporation cannot have more than 100 shareholders, and they must be U.S. citizens or residents. Additionally, S-Corporations cannot be owned by certain entities, such as other corporations or partnerships. On the other hand, an LLC does not have these restrictions, offering more flexibility in terms of ownership. Liability protection is a crucial consideration for business owners. Both LLCs and S-Corporations provide limited liability protection, which means that the owner's personal assets are generally protected from the company's debts and liabilities. This is one of the primary reasons why these business structures are popular among entrepreneurs. Finally, let's talk about formalities. An LLC has fewer formal requirements compared to an S-Corporation. LLCs are not required to hold regular meetings or keep detailed minutes, making them less administratively burdensome. However, it's still essential to maintain proper records and observe state-specific requirements. On the other hand, S-Corporations have more formalities to follow, such as holding annual meetings and keeping thorough records. Well, there you have it, folks. We've explored the key differences between an LLC and an S-Corporation, covering ownership and management, taxation, ownership restrictions, liability protection, and formalities. Remember, it's important to consult with a qualified attorney, tax advisor, or accountant before deciding which business structure is right for you. They will consider your specific circumstances and provide personalized advice. If you found this video helpful, give it a thumbs up, subscribe, and share it with your fellow entrepreneurs.